Hi there, this is Sandra with the Mortgage Center. Another special message for members of the Guelph District Association of Realtors. By the way, we love working with realtors, and one of the reasons why we continue to share these monthly messages is just to help you get ahead and to help you serve your customers, because we know when a real estate agent is doing a great job and has their background knowledge on what's happening from a mortgage point of view, it helps everyone, especially the customer. A couple of things that we're seeing in our office is that we're seeing a lot, most of our offers that are coming through for our clients have conditions. Either they're putting offers with conditions of sale of home or a financing condition. And that doesn't matter if they're a first-time home buyer or if they're buying and selling. A few things that we're working on right now is we do have a few clients who put offers on homes earlier this year, and they still have not sold their houses. They've been either maybe late or tardy listing their house, or with the market shift, it means that they just are not getting what they expected to with their house. So there are always good options. And if you have a customer that they find themselves in that situation, please be sure to have them contact us, because we can kind of walk through that with them without them feeling too nervous about things. On the mortgage front, what we're seeing is that 70%, and this is true across the board, 70% of all mortgages now are variable rate mortgages. And I think the reason why people are choosing those mortgages is rates are quite a bit lower. Like right now on most 5-year fixed rate mortgages, you're at about 5.25, 5.39%, between 5 and 5.5%, whereas variable rate mortgages are at about 3.5%. So again, the rate difference, that's a 2% rate difference. Obviously, the payments are a lot lower, but it's also easier for people to qualify for a variable rate mortgage because of the stress test rate and how that works. Remember, the stress test rate is the contract rate plus 2 or 5.25, whatever lower. So if you've got a 5-year fixed rate mortgage at 5.5%, you're actually qualifying on 7.5%, which is tricky. Even if you've got good income stability and strong income, that really lowers your ability to borrow. Now, although most people are choosing variable rate mortgages, one of the things that we're making sure we do at our office is have responsible conversations with clients about how to manage things when rates go up. Obviously, what we're recommending is that they don't base their budget on the lower payment. Most mortgages have good prepayment options where you can pay extra. Because we also do mortgages for banks, we do mortgages for TD, and they have a very unique product where the payment stays the same regardless about what's happening with the interest rate. However, it could be a tricky situation because as rates go up, people may, especially if they've chosen a 30-year amortization, may find themselves in a negative amortization down the road. So again, it's really important to have those conversations. We are having conversations with those clients about how to manage that. So again, variable rate mortgages, the rates are a lot lower, it's easier to qualify, but they require more effort on the borrower's behalf to manage that situation so that when that mortgage comes up for renewal, they're not stuck in a negative amortization or their payments skyrocket. The other thing that we're seeing in our office is we're doing a lot more Manulife One mortgages. I don't know if you've ever heard of them, but essentially they're an operating line of credit, and it's a particularly great product for your clients who have equity in their house, so low mortgages, and they're thinking about buying something in the next year because they see the opportunities. And the neat thing about the Manulife One is it has a bank account attached to it, and it allows people to access equity But if they're purchasing a rental property with a secured line of credit, for example, the rent can go directly into the line of credit. So it's a very unique product. The particular client it is ideal for is, again, any of your clients who own a house, who are thinking about buying another property, either a cottage or a rental property, or maybe even a home for their kids to live in while they're in high school or university. And then last but not least, we have had many first-time home buyers just in the last couple of months actually put offers on houses. So if you have any first-time home buyers that sometimes like have the jitters about what's happening in the market, we have been able, for those clients who have good income stability, have good credit history, we believe that there's a real opportunity for them to actually buy now, because what we may end up seeing in the housing market is just a bit of a slowdown, like we're seeing right now, because people have the jitters, they're just wondering what's happening with interest rates. But once things recalibrate, I think we'll start to continue to see homes appreciate in value. Obviously, not by 20 to 30%, but I know in Guelph, aside from the last 2 years, homes have appreciated by 6.8% over the last 40 years. So that's some great information. Hopefully you can take away. We're always here to help. You can contact me at the link below to schedule an appointment, or just go to my website at skipthebank.ca. You can schedule an appointment from there, and all my contact information is there. Thanks so much and have a great day.